Welcome to our video on mutual funds. Have you ever wondered what mutual funds are and how they work? Today, we'll explore the basics, including what mutual funds are, why they matter, and how they can benefit you as an investor. Mutual funds play a significant role in the world of investments, offering a way to diversify your portfolio and manage risk effectively. With expert insights and clear explanations, we aim to make the complex world of mutual funds easy to understand. As we go forward, you're about to discover the foundational knowledge every investor should have. What exactly is a mutual fund? In simple terms, it's a type of investment vehicle consisting of a portfolio of stocks, bonds, or other securities managed by professional fund managers. There are various types of mutual funds, each designed to meet different investment goals. Some focus on stocks, providing higher growth potential but with more risk, while others concentrate on bonds, offering more stable returns with lower risk. Balanced funds aim to provide a mix of both growth and income. At its core, a mutual fund pools money from many investors to create a diverse portfolio. This allows individual investors to access a broader array of investments than they might on their own. Understanding these basics gives new investors a solid foundation. Now that you have a grasp on what mutual funds are, let's move on to how they actually work and what makes them an attractive option for many investors. Now that we understand what mutual funds are, let's dive into how they work. Mutual funds operate by pooling money from numerous investors to purchase a diversified portfolio of securities. By investing in a mutual fund, you access a variety of investments for a relatively small amount of money. The expertise of fund managers is crucial. They make investment decisions, research opportunities, rebalance the portfolio, and strive to meet the fund's objectives, maximizing returns while managing risks. Mutual funds typically offer different share classes, each with its own fee structures and levels of risk, giving investors options to match their needs and risk tolerance. As we move forward, you'll see the various benefits that investing in mutual funds can offer, from diversification to professional management. Stay tuned to learn why mutual funds could be a smart addition to your investment portfolio. Investing in mutual funds offers numerous benefits for both beginners and experienced investors. One major advantage is diversification. By spreading investments across a wide range of assets, you mitigate the risks associated with putting all your eggs in one basket. Another key benefit is professional management. Expert fund managers handle research, selection, and monitoring of investments, giving you peace of mind and freeing up your time. Moreover, mutual funds provide liquidity, allowing you to buy or sell shares at their current net asset value at any time, making your investment accessible when you need it. Additionally, mutual funds are generally affordable, with many requiring only a modest initial investment, making them accessible to a broad audience. As we move forward, you'll see how mutual funds stack up against common misconceptions and learn how to select the right one for your financial goals. There are several misconceptions about mutual funds that often discourage potential investors. One major myth is that mutual funds are inherently high risk, which isn't always true. Another common belief is that mutual funds come with exorbitant fees, deterring many from considering them. Lastly, many people think mutual funds are too complex for the average investor to understand. These myths create unnecessary fear and hesitation. But as we dive deeper, we'll debunk these misunderstandings and reveal the true nature of mutual funds. Let's dismantle these misconceptions one by one to give you clarity and confidence for informed investment decisions. Choosing the right mutual fund can feel overwhelming, but a few key steps can help you make an informed decision. First, assess your risk tolerance. Are you comfortable with more volatile investments, or do you prefer stability? Next, understand the fund's objectives. Does it aim for long-term growth, income, or a balanced approach? This alignment is crucial to meeting your financial goals. Finally, evaluate the fund's past performance. While past performance isn't a guarantee of future results, it provides insight into how the fund has managed through various market conditions. By carefully considering these factors, risk tolerance, fund objectives, and performance, you can find a mutual fund that fits your needs and helps you work towards your financial goals. Stay tuned to learn how to take the first steps into the world of mutual funds. To start investing in mutual funds, the first step is to open an account, which can be done through a brokerage firm or directly with a mutual fund company. Once your account is set up, choose a fund that aligns with your financial goals. Consider factors such as your risk tolerance, investment horizon, and the fund's performance history. After selecting a fund, making your first investment is straightforward. Decide how much you want to invest and follow the instructions to purchase shares of the mutual fund. With that, you're on your way to becoming a mutual fund investor. As we move forward, you'll see how managing and monitoring your investments can help you achieve your financial goals. We've covered the basics of mutual funds, their benefits, and how to get started. Now, it's time to take the next step and start investing in your future. By understanding mutual funds, you can make informed decisions that align with your financial goals. Remember, the sooner you start, the more time your investments have to grow. Take action today. Open an account, choose a mutual fund that fits your needs, and make your first investment. Your future self will thank you. As we conclude, we encourage you to take charge of your financial journey. Start investing in mutual funds and pave the way to a secure and prosperous future.